So now let's focus in a little bit more on the recipes for the doubt as to collectability offer and compromise. That's the most popular one. It's the one that everybody wants when they come into a tax professional, a tax resolution firm in particular. The first question, can I settle some of the IRS debt? So here's the recipe for the doubt as to collectability offer and compromise. First of all, if your reasonable collection potential, and that's a term of art that the IRS uses in the offer and compromise process, if the reasonable collection potential, or RCP, is less than the tax penalties and interest over the course of the collection statute expiration date, the statute of limitations of the IRS, then they will cut a deal for that taxpayer. However, they will not cut a deal for a taxpayer if they are even $1, their RCP, their reasonable collection potential, is over the amount that they could collect over the course of time that they have to collect it. Remember, we've talked about the collection statute expiration date already. That's the 10-year statute of limitations that the IRS can come against you for those 10 years, and there's a myriad of different types of exceptions and things that stop and start or restart that collection statute expiration date, or CSED. But that's the big overall overarching principle with this type of offer and compromise is, does that RCP exceed the, or is it less than the amount that the IRS could come after you for over the course of its 10-year statute of limitations, all right? And that's really it in a nutshell from a very broad standpoint. So here's what the RCP, that reasonable collection potential, really means. It's how much the IRS, again, can collect over its statute of limitations. We've talked previously about the Form 433A, and 433 Form Collection Information Statement is going to be due when you ask for an offer and compromise with the IRS, and we've already been over that one. If you didn't catch that one, please go back and check it out. But essentially, what that form is looking for is current information on what your income, your gross income, and your expenses that the IRS will accept. That difference is the net disposable income, and that is what they will take, that number. They'll take that out times the number of months that remain on the collection statute. And how do you find out what the collection statute date is, the last date that the IRS can come after you? It's the IMFOLT transcript. Another thing that we've talked about previously on how to get one of those forms. They're not super easy to get that form, and if you have any problems getting that, you'll definitely want to talk to a tax professional. You can talk to us at 800-721-7054. But quite simply, the amount of your net disposable income times the number of months remaining in the collection statute plus any equity in assets. Oftentimes people's homes are the biggest asset that they might have. That is the number that all equals the IRS's reasonable collection potential. Okay, so again, if you're on one side of this, if your reasonable collection potential is less, you're going to get an offer and compromise, excuse me, most likely. And what does that offer and compromise look like in the context of the doubt as to collectability? Once you have met this first threshold that you're not going to essentially be collectible, including penalties and interest on the tax over the collection statute, then they will default down to this 12 months of net disposable income from your Form 433. Okay, so just for ease of talking about these things, let's say that after taking your gross income minus your expenses, let's just call it a round number of $1,000, for instance, you would, once you've met the reasonable collection potential threshold, you take that $1,000 that's left over at the end of any given month, take that times 12, and you would have a $12,000 offer in compromise. And that scenario that I just played out obviously didn't have any assets in it, but if it did have, let's say, net equity in a home, let's say it was $5,000, that would be taken into account here too. So it would be $12,000 plus the $5,000 of equity for a total offer in compromise, doubt as to collectability of $17,000. All right.